Welcome to this video where we're going to talk about the cash flow statement and provide a brief introduction. In addition, we're also going to answer some of the most important life questions like, is Kylie Jenner self-made? All right, so let's stick to the important stuff. So Kylie Jenner is a billionaire, and Forbes recently named her as the youngest self-made billionaire. And there was a controversy over the choice of the word self-made billionaire. This was big drama. It was reported all over the news. Kylie Jenner, self-made billionaire, and they had to explain themselves for Kylie. There's another article. Is Kylie Jenner actually self-made? Here's why Kim Kardashian says the answer is yes, right? Kylie Jenner's now a billionaire. Is called self-made. Is that really true, right? Everybody's calling out this question. Self-made millionaire. Twitter's aflutter about this. Makeup mogul's new status. Kylie Jenner's world, what does it mean to be a self-made billionaire in Kylie Jenner's world? So to be clear, the way Forbes defines self-made is that someone who built a company or established a fortune on her own rather than inheriting some or all of it. You know, a business author said that they believe Kylie is not self-made because describing Kylie Jenner self-made is a misnomer because she at no time faced true entrepreneurial challenges. And so there's been a lot of hate. Kylie has a response to most of this, so let's hear Kylie's side of it. In my best Kylie voice, I'm going to give this. I have no idea what she sounds like. I've never watched the show. My parents told me I need to make my own money. It's time to learn how to save and spend your own money. Stuff like that. All right, so this is what Kylie's response was. The self-made thing is true, Jenner told the paper, citing the fact that her parents cut her off at age 15. All right, so there's probably a debate to be had here, but let's just be clear here. Like that comment right there, that just blows up the whole, like you lose all credibility. Abraham Lincoln once said, better to be thought a fool than to speak up and remove all doubt. And this is an example of you just don't say anything. We have video evidence that you weren't kicked out at age 15. You weren't cut off at age 15. Come on, cut off at age 15. Give me a break. So you didn't have any, parents never bought you any food at age 15. You didn't sleep at the house. You had your own apartment. You were illegally driving a car. You were just walking everywhere. And so you were completely cut off. Yeah. Okay. Come on. Let's get real here. Of the things that's been said, I can definitively say her being cut off at age 15, probably an exaggeration. People saying Madam C.J. Walker was self-made. Not you, Kylie. Kylie Jenner's not a self-made billionaire. Her family's already worth millions and incredibly famous. All she did was leverage her fame and fortune. You know, there's a lot of hate out there, right? Stop referring to Kylie Jenner as self-made billionaire, peoples. It's an insult to anyone who had to work their way up without privilege. Self-made is so delusional too. She certainly had a head start with money in this world. Every resource is already at her fingertips and a mighty nice cushion of money to fall back on had she failed. Someone like Mark Zuckerberg actually innovated and created his space in the world. You know what's really funny? Mark Zuckerberg and Kylie Jenner have a lot in common. They both came from kind of wealthy families. They both took stuff that was already existing and just did it differently. Mark Zuckerberg didn't invent the social network or even his own social network. He borrowed the idea from somebody else at school to leverage schools as a network. And then he also, there was other social networks out there. There was MySpace, there was other networks that were out there. He just did it better. Kylie's just done the same thing. Dictionary.com got in on the action. Haven't we gone over this? Self-made, having succeeded in life unaided. And Merriam-Webster Dictionary, well, self-made is spiking. Wendy Williams went on record and said, we all had some sort of aid. If we just had a hug from our parents, that's some sort of something. You might say, well, she's not self-made, but you know what? The bigger scheme of things, yes, she is. Don't hate on this girl. Well, wait one sec here. Hold on. Just to go on the record, I'm ever given a choice of, hey, you can have $1 billion or you can have all the hugs from your parents. I'm going to let you know something right now. $1 billion every day of the week. All right. So trade all those hugs, $1 billion, no question. That's an easy one. Her thing about, saying, hey, don't hate on this girl because she did it. Shut up, Wendy. We're going to be super judgy. We're America. That's what we do. Get out of here. So the question is she self-made? I don't really know. I don't really have the definitive answer. But if we had her cash flow statement back for the last few years, we'd have a good insight on piecing together whether she met our own personal definitions of what self-made was. And so the real question that we have is, what are her sources and what are her uses of capital, right? Where is she getting money from and how is she deploying it? The answer to that question will essentially lead us to this idea of whether she is self-made. So this is the cash flow statement, essentially. The cash flow statement tells us where we get cash from and where we're investing it and deploying it. This is the typical setup that we have for the class where we talk about the balance sheet. That's the core financial statement where everything goes back to. And we have assets, liabilities, and owner's equity. And then we've been talking a lot about the income statement in the past. And the income statement, revenues, expenses, gains, and losses, those all are part of a single account in the balance sheet, and they represent retained earnings. So the income statement right here represents retained earnings. This is the retained earnings account. Retained earning account in owner's equity. So you got your net income minus expenses, net out your dividends, you get to your retained earnings. Well, just like that, we have a similar thing coming out of our balance sheet with the cash account. And the cash account, we expand into this financial statement. This is kind of a crooked financial statement. That's a piece of paper right there. And this is going to be our cash flow statement. And there's going to be three parts to it: operating cash flow, investing cash flow, and financing cash flow. And they're all going to represent different cash flows that happen in the year for cash. What goes in, what goes out. And all we care about is cash. The question for Kylie related to the cash flow statement is, how much of this came from Kylie doing things on her own? How much was Kylie making her own before she hit it big? This is what we'd call operating cash flow. Kylie, I'm sure like some of her sisters, had some sort of sponsorships associated with getting, putting products in her Instagram feed and other social network feeds. And so as a result, she probably had some internal income that she had just from being who she was. And so we call that operating cash flow. That's the cash that she generated on her own. And in a business, it would be whatever you generate in the business. It's all the cash. So if you are a Ford dealership, it's from selling cars. It's buying cars from the factory and then selling them to customers that come in your door. That's your core business. That's your operating cash flow. The other part of cash flow that we want on this statement for Kylie is, how much did Kylie invest in her own business to make it? All right. So did she buy the camera to set up the studio? Did she get the green screen? Did she get all these other features to make this happen? And where did she spend and invest the capital? That would inform us on how much she built on her own versus, just walking into stuff that already existed. So investing cash flow as it relates to companies, if we're thinking of like a car dealership, an expanding car dealership, just like we had for operating, an investing cash flow for a car dealership would be something that would be used over multiple periods. It's any purchase of an asset of some sort that is going to be held over a longer period of time that is not consumable in that period. So it's not like a car that you'd consume in that period because you're a dealership, you sell cars. It might be, you might decide to remodel a building, right? Make your showroom better. You might decide to buy another location so that you have additional space for your extra cars. If you're buying land, you're buying equipment, you're buying buildings. These are typical investing cash flows. They're investments that are over multiple periods. So in Kylie's case, this might be buying a camera, buying some lighting, buying a studio. So that's an investing cash flow. All right. Then financing cash flow. And this is this is the tasty part. This is the part that you guys that are haters out there, you're going to be like, oh, yes, give me into this. All right, because financing cash flow will tell us exactly where she got money from. Everybody's like, hey, Kylie got money from her mommy and daddy and whatever, right? Well, this would tell us where it is. And so financing cash flow tells us how you raised money to invest the capital you needed to build your business, right? So did you sell equity? Did you sell debt? How did you do it, right? And it's not just outflows. If you want to repurchase equity, so if you sold equity and you want to buy it back, that would be a cash outflow for buying it back. It would be an inflow when you sold the equity, right? And then same with debt. If you got a loan or if you issued bonds, it would be a cash inflow. And if you repurchased a loan or paid off the debt, it would be a cash outflow. So those are the financing cash flows. And that's the part that we'd want to get at. That's what we'd want to get into. And we want to say, okay, well, where is her financing cash? That juicy, the juicy nitty gritty of like how much she got from other people. And you know what? Based on what I can see is it seems like she pieced a lot of this stuff together. So I don't know how much she got from that, but that's what we'd want to see. There's also some aspects of this where people are getting into, some judgy endowment stuff, and that's okay, right? Like if Kylie looked like this, like she had a face like this, like she clearly is an attractive girl, right? And so as a result, like that plays a factor, right? She's a cute girl. And so if she had been born with like a face, right, she probably wouldn't have made it as big as she did with her. But this basically gets to the nitty gritty of how she built her business, the cash flow statement. There's a reason why we've waited to teach this to you. And the reason why is because we are unwinding a lot of the accrual stuff that we've done in the past. In a cash flow statement, you're not concerned about economics nearly as much as you are about cash. The only thing that matters in the cash flow statement is cash. What was exchanged? What changed hands? That's what we care about in the cash flow statement. And so kind of doing a mind meld on you, kind of backing out your accrual thinking and thinking, okay, what matters? Cash. Let's focus on that. Cash is the blood of the business. And so the entirety of everything we talk about with cash flow statement is determined by what happened to our cash. Is it going up? Is it going down? And how we report it. Is it classified in operating, investing, or financing activity? So in summary, the only thing we track on the cash flow statement is cash. There's three components to the cash flow statement: operating cash flow, investing cash flow, and financing cash flow. To answer your question, is Kylie self-made? Really, we have to get to her sources and uses of capital to get to that. How much came from Kylie doing things on her own? I'm not sure how to cut it as far as doing things on her own, but I'm pretty sure it's pretty good to be a Kardashian as far as like operational costs go, if you're living at home or whatever. How much came from her internal investment? All right. So what was she buying on her own? What was she putting together? How was she using those resources? What was just gifted as far as those resources were there? She probably had a social platform that I'm pretty sure she built a lot of that on her own, initially at least, and now probably has a team that manages it for her. And then financing. Where did she get external capital? Is this all from mommy and daddy? Or did this come from other investors? Because I can tell you, based on her returns, there's a lot of venture investors that would probably want to invest in it too. So the platforms that she had, the other things are things in addition to it, but financing cash flow is going to tell us where she got cash. So question is what do you think? Do you think she should be classified as self-made? And what do you think the cash flow statement would show related to this? Would love to hear your feedback. See you in the next video.